right, ladies and gentlemen, we're going to get started. So thank you for coming. Happy 420. No, it's not that kind of event, but thank you all for coming. So my name's Rob. I organize Idea to IPO. We've been doing events in Silicon Valley for many years. We hold events multiple times a week from San Jose to San Francisco. We have a busy calendar of events. I'd like to highlight just two events that are coming up. Next Thursday, April 27th, we have another venture capital panel, funding for AR/VR startups. That's at Pillsbury Law Firm in Palo Alto. Later on down the line, Thursday, May 11th, we have a panel discussion on the latest innovations in deep learning. That's at Nokia in Sunnyvale. So check out all the details for those events and all of our events on our website, ideatoipo.com. We were launched officially on February 1st, 2010. At that time, we had no members, no events on our calendar. At this stage, we have over 50,000 members among all our meetup groups in the Bay Area. We've completed over 1,725 events. By any standard, by any measure, we're the most active, most prolific startup event organization in Silicon Valley, bar none. I appreciate that enthusiasm. Our mission is to promote entrepreneurship, support entrepreneurs, build community, and provide value in the Silicon Valley startup ecosystem. To that end, we provide content that is practical, actionable, and relevant, stuff that you can actually use to succeed as entrepreneurs. We believe in building community because Silicon Valley is an aspirational ecosystem. It attracts people from all over the world who come here to do great things. In fact, I'd like to know, who here is not originally from Silicon Valley? Who here was born and raised in Silicon Valley? Just you three? No. Well, anyway, welcome to Silicon Valley. But whether you were born and raised here or you arrived last night, it's important for us to provide multiple channels for you to meet people, build relationships, and grow your network, which is so important in Silicon Valley. So besides our content-oriented events throughout the week, we do have social events on Friday nights. In fact, we have a regular event, a TGIF Mixer. It's hosted by one of our team members, CJ Terrell. In fact, tonight is CJ's 100th Idea IPO event. So he's been supporting us for a long time. So let's hear it for CJ Terrell.
Hi everyone, I'm CJ. So yeah, as Rob mentioned, I just wanted to make a brief side comment. My first Idea to IPO event was just a little under 3 years ago, and it was actually here at College of San Mateo. What I can say is it's a really great ecosystem that has fostered entrepreneurs just at this college, and having been born and raised here in the Valley, it's really a special place to be. And so for that reason, what really caught my attention were these TGF mixers that were being held through Idea to IPO, even before I became part of them. And so what we've built them up to be are really great landing pads. For anyone who's coming from across the world, you really name the country, there's a good chance that people have come to these events. Our next one's going to be tomorrow at 8 p.m. They are free, and it's going to be at the Hyatt Regency in Santa Clara. You always get a really good crowd out, and we get about 10 to 15 countries represented at each mixer. There's no topic, but it's a really fun way to meet new people that are in the area. I highly recommend you come out. Again, Hyatt Regency in Santa Clara. It'll be tomorrow at 8 o'clock. We hope to see you there. Thanks.
With regard to value, it's important we provide value at each and every one of our events. Not just value for your money, which is important because we know many entrepreneurs are struggling financially. So we make sure that our events are affordable. And if you can't afford it for whatever reason, let me know. There's other ways that we can work things out. We're always looking for volunteers to help us out at our events. And we make sure that we have a decent buffet at each and every one of our events. How's the buffet tonight? Well, I'm glad somebody likes it, but anyway, we do our best. More importantly, though, at each and every one of our events, we want to make sure that we provide value for your time, which is your most valuable resource. Anyone here getting any younger? Anyway, just checking. So when you invest your time to come to our events, we want to make sure you maximize your ROI. We have many partners that help us do what we do: law firms, venture capital firms, angel investor groups, incubators, accelerators, colleges, universities, and lots of other players in Silicon Valley. Tonight, we're grateful to the College of San Mateo and the Small Business Development Center for hosting us at this beautiful venue. Is this a beautiful venue? Yeah. Anyway, we've held many, many events here, and we look forward to many, many more. I'd like to have Robert Schaffner from the Small Business Development Center in the College of San Mateo come up and say a few words.
Thanks, Rob. Good evening. How's everyone this evening? You look like you get a little bit more body energy here. You've got a great panel. You're going to hear a lot of great information. How many of you are familiar with small business development centers? So I talked to a couple of people this evening. They said they never heard of them before. Well, small business development centers, there's nothing small about them. In the state of California last year, small business development centers provided 98,000 hours of one-on-one counseling for businesses, helped create 1,231 new businesses, helped create 6,600 new jobs in the state, and provided capital infusion sources connecting up with venture, angel, equity, as well as traditional lenders to the tune of $787 million. So we estimate that SBDCs in the next year to 18 months will pass providing on an annual basis $1 billion of capital to help small businesses get started and thrive and grow. Now, if you break that down to the county of San Mateo, or in this district, the 13th Senate District, we advised 682 clients, provided 4,300 hours of advising, had created 553 new jobs, provided capital infusion of $45 million. So we're pretty effective at what we do. We do two main things. One is one-on-one counseling, and the second thing is workshops and various events like this. Next week on Tuesday, we're going to have a panel on sources of equity capital and how to prep your clients. It's going to have Bill Reichert here, Ephraim Lindenbaum, Keith Spears, Dave Goslin, Roger Royce, who's on the panel this evening. Thank you, Roger. Hong Wong and Jerry Bargnano from the Tech Futures Group. That promises to be a really great panel. We're going to have part of it's going to be on equity crowdfunding, sort of a new way to fund businesses. Goldman Sachs estimates the market potential for equity crowdfunding is $1.2 trillion. So it's something that you want to come and hear about, understand how that particular type of funding works. Again, I work here at the college as a professor teaching entrepreneurship among several courses that I teach, but I also run the SBDC here for the county, and on behalf of the college district, I want to welcome you here this evening. If you get a chance at some point, you can get a little bit of the sensitive view from this floor, but if you go up to the fourth floor, you can see all the way to San Francisco, and you can see all the way down past the Dunbarton Bridge. It is a spectacular view. So have a great time this evening, and welcome.
I'm sure that bell ring was unintentional, but anyway. Next up, we have Long from Aptology.
Good evening. My name is Long. I am the co-founder of a company called Aptology. We are a local California-based software company. We've been around for about 5 years, over 400 clients. I myself have been in the Bay Area for over 20 years. I live down the street in Saratoga. So what do? We do web, e-commerce, blockchain, IoT, of course. So we can do some of it, half of it, or all of it. Some of the things that's unique, we also help our clients do marketing and sales after we finish the solution. So one of the first things that you're going to get asked is, do you have any tractions? Do you have any customers? That's what we can help with. The third thing that we do is we also help our clients find partners. For example, you're the CTO and you're looking for someone that's VP of marketing. We can help you find partners and or investors. So if you're doing a startup and you want to hear about some of the experiences that I would like to share with you, I'd be more than happy to buy you a cup of coffee. Again, my name is Long. I look forward to having a cup of coffee with you. Thank you.
Robert has an additional message.
On your chairs, you have a survey. I would very much appreciate it if you would fill it out and hand it over to the table before you leave. The College of San Mateo is getting ready to build a new building here on campus that will be a co-working and makerspace. And we're trying to get ideas about how to do that, what should be a part of that space. So if you could give your feedback, it would be very much appreciated. Thank you.
All right, next up we have Melinda and Taylor from IoT World.
Whoa. Hi guys, how are you? So we are from Internet of Things World with a company called Informa that puts it on. We kind of started the business out here about 4 years ago and started to promote our show IoT World in 2014. And now we're up to about 11,000 attendees just within 4 years, which is pretty impressive. So we are going to have our event on May 16th through the 18th in Santa Clara, which is just, for those of you who don't know, it's just kind of right down that way, down the freeway. And we are going to be talking about a lot of different vertical themes, horizontal themes, from the consumer side, the industrial side, and the IoT enablers as well. About 400 speakers, 250 exhibitors and sponsors, and then like I said, about 11,000 attendees. So what we're here to do is talk about a portion of our event called Project Kairos. So Taylor is going to talk about that with you guys.
Hi, so Project Kairos is our startup portion of the event. Here. Project Kairos is our startup portion of the event. We have Startup City on the expo floor that'll have about 100 startups showcasing, as well as a pitch-off competition in front of investor panels, and then also a startup academy on the first day. So yeah, it's going to be really exciting. It was our most buzzworthy part of the expo floor last year. ABC7 News did a little segment on it. So if you're interested in either getting involved as an investor or as a startup, just let us know and we can give you more information.
All right, next up we have Angie from IBM. Let's hear it for IBM.
Thanks, Rob, and thanks, Robert, for hosting us. So, so I'm from this small company that's only been 106 years old in the Valley. So, if you're interested, I'm part of the team that focuses on working with startups and developers, from technical enablement, from business mentoring, from marketing. If you're building solutions, that's IoT, cognitive computing, big data, machine learning, blockchain. If you can leverage cloud, please come and talk to us. We have a table at the back, so look forward to meeting all of you. Thanks.
All right, last but not least, we have Jesse from Agile Points.
Hi, everyone. So maybe let's start with, if you have a choice, how many would like to be an entrepreneur? No one? I think everybody wants to be, right? How many of you study computer science? Okay, small portion. So what we do is a next generation application development platform that enable you to create applications even if you're not a computer science trained. Okay, how does it relate to IoT? A lot of IoT right now in the space, there's a lot of IoT devices, but when you look at IoT, there's a data, there's a gateway and everything. But the thing is, the real value is when you can connect that to the rest of the enterprise. And that's when everybody's stuck. And that's what we do. So in a way, the platform enables you to be an entrepreneur for IoT, even you are not computer science trained. And that's what we do. And we have a booth there. Thank you.
Okay, so though our local mission is to help entrepreneurs here in Silicon Valley, our greater mission is to democratize entrepreneurship and innovation all around the world. So to that end, we have a robust YouTube channel, youtube.com/idea to IPO. We have tons of videos. We've documented and archived many of our events. This rich, valuable content is available on demand, anytime, anywhere, totally free of charge. Whether you're in San Mateo, Palo Alto, Maui, Moscow, Timbuktu, anywhere in the world where you have access to Wi-Fi. Our partner in this endeavor is Tim Jeggers of Jeggers Films, one of the top videographers in Silicon Valley. Tim.
Thank you, Rob. Oh, that's loud. Thanks for coming, everybody. We appreciate your time. I'll make it brief. I'm Tim. Like you said, I do the videos for Idea to IPO. I've been helping out for about 1.5 years now. I got my start doing wedding videography, and then I kind of branched out into events and informational pieces. I dabble with a little bit of photography and multimedia in the Bay Area. And yeah, if you have any questions about any of that stuff, feel free to talk to me after the event. I'd be more than happy to speak with you for a moment. And one quick request on my half, if you could hold your questions until the end, that would be great so that they can get through their panel discussion, and then we'll open up the floor a little bit after 8 o'clock. You can all line up, come up here, ask your questions, and that way we got great audio for the video, and then everyone on YouTube can see it and hear all your wonderful questions. So again, I'm Tim, and thank you for coming out. We appreciate your time.
Okay, before we get started with the program, I want to mention that we have a raffle, and that's going to occur at the end of the formal program and after the Q&A session. We have some great prizes, including a Roger Royce book. We've got a $25 gift card for Amazon. We have $100 in cash, and we have free tickets to Internet of World Conference, which is coming up on May 15th and 16th. So anyway, so who could use $100 cash tonight? Well, anyway, you must be present to win, so if nothing else, someone will get funded tonight to the tune of $100. So you must be present to win. So without further ado, I'm going to pass it off to our distinguished moderator. He is one of the top corporate startup attorneys in Silicon Valley. He is well known. He's moderating panel discussions, conferences, speaking at universities. He is everywhere. He is Roger Royce. So let's hear it for Roger.
Thanks, Rob. Introduction gets better every time I hear it. Well, welcome everybody. It looks like we've got a nice cozy group here tonight to talk about IoT. And this has been billed as venture investment in IoT. I think we're going to make that a little broader. I think we'll talk about the opportunities in IoT, what it is, where you're going to be able to find something of value here, funding of IoT, strategic relationships, everything about IoT. So before we get started, I'd like to get a little bit of a sense as to who's here in the audience. How many of you are entrepreneurs? Startup entrepreneurs, I take it. Investors? Okay. There he is. I found the investor. Service providers like myself? Okay. Well, that gives us a real good sense as to what to talk about. So for those of you who don't know me, I'm Roger Royce. I'm the founder of the Royce Law Firm. We're a corporate business and tax firm based primarily out of Silicon Valley with offices around the state. And what I like to tell people about our firm is that we're much more than just that legal commodity. We really do create communities for people. And you may know that there's a lot of bundling going on in a lot of different verticals, a lot of different sectors, including legal. So when people come to us, it's really a legal as part of their solution, but they really want strategy. They want people, they want access to strategic partners, investors, customers. We do all of that through our events, our services, events like this, and annual conferences in several verticals that we hold that I'm happy to talk more with you about. On our panel tonight, on my immediate left, Nitin from Unshackled Ventures. He's the founding partner of Unshackled Ventures. It's an early stage venture capital fund. It's really unique. It's for immigrant founders in the U.S. It's supported by nearly 80 investors, including some very big names that I'm sure you've heard of. Before starting Unshackled Ventures, Nitin founded an experiential e-commerce company. Before that, he ran finance and strategy for an edtech startup. On the end is George Arabian. He's the managing partner of Steelhead Ventures. It's a micro-venture capital fund that does seed stage investments in Silicon Valley tech startups. Steelhead's portfolio includes startups headed by 30-plus visionary founders whose ideas and companies impact the marketplace and communities profoundly. IoT is a big area and a key focus of George's fund. And finally, we also have, if I can find your bio here, Deborah Magid, the Director of Software Strategy for the IBM Venture Capital Group. Deborah represents IBM's $25 billion software business in the company's 12-year venture capital group, and her expertise spans several areas. She's responsible for sharing insights about emerging markets, technologies, and business models with venture funds and entrepreneurs around the world. Primarily, rather than a traditional VC function, she scouts for business opportunities and assists IBM with strategic partnerships or other sorts of relationships with startup companies. So that is our panel, and I think the way I'd like to start this out is I'm going to turn it over to our panelists. I gave kind of the high-level view of who you are, but I think a good place to start, maybe starting here with you, Nitin, is to maybe say a little bit more about who you are and how you come to this area. And I'd like each of the panelists, because we're talking about IoT, but the more I talk about that with people, the more I start to wonder if we're talking about the same thing. There's so much to it. People, some people think of it as hardware. Some people think of it as the whole system. Some people think of it as an industry. So maybe describe for us what this IoT is for our audience that we're going to be talking about tonight.
Sure. Thanks, Roy. So as I'm really loud. So I founded Unshackled Ventures about 3 years ago with the objective to help immigrants who are in the U.S. and now want to start their businesses succeed faster. The objective for us is not just capital infusion, but making that capital go further by taking away any distractions, which in the case of our audience is the time that is spent either waiting for your green cards and citizenship or in dealing with immigration. So besides our capital investment, we take away any immigration-related challenges, including employment at Unshackled, if needed. And we focus a lot in integrating the founders into a deep network, not just in Silicon Valley, but across the country. Many of our investments are in the industrials verticals, which are obviously not as present in Silicon Valley as they are in, for example, Midwest. So we work a lot with corporates and executives who are in Midwest. For me, I don't think of IoT as an industry. It's the expectation is that everything's going to be connected. Pick your own time frame. And the way we kind of look at the future is if everything's going to be connected, what does that mean for a lot of the business models that exist today, the way we operate today? How is that going to change? What's going to catalyze that change? And therefore, where will the value come from? So to answer your question, what we really focus on is when we meet entrepreneurs, we want to look at the future from their lens. And we really want to say, where in the stack are you playing? And is that particular layer that you're playing at capable of generating a venture-sized business? A venture scalable business.
Okay, thanks very much. Deborah?
Thanks. Yeah, that's loud. So I'm in IBM's software business, and I support the various business units. That includes IoT. It does actually include hardware because everything's software these days. And Watson and cognitive computing and big data and analytics and cloud. All of these things, though, are not separate things. So, Internet of Things is not separate from analytics and from cloud and from cognitive computing. These things are all tied together. And one of the things that's made it possible for everything to be connected, as you say, and I agree with you, is that there are now more connected devices in the world than there are people. That is literally true. In fact, every US soldier has an IP address. So people are things as well in a lot of ways. And actually, I'm wearing a Fitbit, and it's talking to my iPhone right now as we speak, and I'm obviously inactive. But the fact that you now have enough of network capacity and enough network coverage through mesh networks or larger broadband networks, and you have the ability to analyze information that all of these devices are throwing off, just creates tremendous opportunities in almost every industry that you can think of. So, all the new cars are connected vehicles, and this is completely unrelated to whether or not we have self-driving cars. A John Deere tractor is a connected vehicle and is part of the agricultural revolution. And so if you think about the things in your life and the things in the world that have sensors and that have software and that throw off information and the intelligence that people can apply to make sense out of that information, that's our business, and that should be your business if you're in IoT.
Now I got to figure out how to get that out.
Just
got it.
slides out.
Hi, everyone. Welcome. Steelhead Ventures is not necessarily an IoT fund. We are fundamentally driven by making investments in founders that we have that we believe have the character, integrity, and vision to grow a big company, as well as the ability to attract and build a team. It just so happens that the most successful company we have is a couple of brothers that never had a day of education, but are transforming the construction business, and it happens to be driven at a very basic level by an IoT device and heavy equipment. But our original value add there was we wanted to support those two brothers because we felt they had the ability to build a big company. And so that's the thesis behind our fund. My background is growth and driving fast growth, typically in my past across the globe. So we created a growth service that's an add-on and a value-add service with a team of experts called Growth Corner, because we try to add value, and that's one of the most significant ways to add value, called Growth Corner. So we try to find ways to add value. As far as IoT, to your point, and to the team's, to the panel's point, I think it's becoming much more of a necessity to have a form of data that is fundamental to a platform, and it just so happens that physical devices are now much easier to connect and drive data. So I think the market itself is evolving rapidly, and the term is sometimes to me a misnomer because it's almost a requirement. So that's it for me as an overview.
Okay, thanks very much. So the way we will do this, we're going to have a panel discussion until about 8:10, and then in idea to IPO style, we'll open it up to questions. So I know you're going to have some questions, some comments. You may disagree with some things you hear here tonight. So save that until 8:10 and line up right over there. Rob will give you a microphone. You'll have a chance to interact. If you're tweeting tonight, use hashtag idea to IPO rather. If you want to tweet to me, I'm at rroyce00. So let me kick things off with, I'm going to start with a specific question rather than a general one, like I usually do. Natine, we were talking a little bit earlier, and you drew a distinction for me that I hadn't really thought about, and that is the difference in the market here between industrial IoT and I guess consumer IoT, and how you think it's really a big difference. And in fact, I think you said you're mostly doing business in the Midwest where there's a lot of industry, and you tend to shy away from one and towards the other. Could you explain what the difference is and why you're so bullish on one and not the other?
Yeah, I would say the difference is very similar to when you look at software, and there's consumer software and business software. When you look at internet, we talked about consumer internet versus business use of internet. It's the exact same thing. So any particular technology vertical, which IoT is kind of more horizontal, but any technology stream that you look at, you want to draw differences between industrial adoption of that technology and consumer adoption of that technology. The reason it's so different for us is the execution path, depending on where you sit, is very different. If you're building a consumer product, which is a connected product, the DNA of the team will be much more about marketing-driven growth, channel-driven growth. There should be a lot of focus on design. There should be a lot of focus on how you are going to build this in a price point that is accessible. Versus when you're building an industrial IoT product or an industrial connected device, you're looking at what is the incentive for your desired customer, who you have to go through the customer development process to figure out. If it's an agricultural farm, what is going to drive the adoption for that versus if it's a beverage manufacturer or if it's a car manufacturer. So and that execution path is much more enterprise sales driven. The design factor might not be as high because you're selling to someone where it's going to be used in industrial capacity. Usually industrial things don't look as pretty as consumer things do. And therefore, the DNA of the company is built much more around utility and enterprise sales. So, and building startups is all about execution, and hence I draw that distinction. Also, the value proposition for industrials or industrial customers to use a product that drives productivity is significantly higher than the value proposition that you can draw on the consumer side. And so for me to build a really successful connected device business on the consumer side is extremely, extremely hard. You look at success outcomes. I can only think of Fitbit. There's been a few others. But when you think of the success outcomes on the industrial side, there are real problems on the industrial verticals. You look at infrastructure. So take water as an example. It's a massive infrastructure that spans the entire globe, wherever water is delivered. Or you look at treatment plants, you look at beverage companies that treat their own water. Those infrastructures are so big that it's humanly impossible or highly inefficient to man those infrastructures, and therefore these companies are motivated to adopt technology to make it more efficient, and therefore the incentive is significantly stronger, and the value proposition is much stronger. So I'm much more focused personally on industrial adoption of connected devices, which drives much more corporate value than consumer adoption, which drives relatively less consumer value. It's more entertainment value at all.
I would say, well, IBM's business has historically been industrial. We're starting to look at areas that are not traditionally manufacturing or windmills or roads or railways, but now looking at things like drones and agriculture and things that are adjacent. But I thought a couple of years ago that the adoption of consumer IoT was way lagging behind industrial, and that the use cases and the investments were not very interesting. And then over the last couple of years, we started to see solutions that actually are pretty practical. And you have to really think about what the application is. So I'll just give one example. Whirlpool created connected washing machines. Now, for me to have one in my house so it can reorder soap or maintain itself, I don't really care. But if you're in an apartment building and you're the apartment building manager, or if you're running a laundromat, you care a lot. And so the applications for specific kinds of consumer solutions have to be considered quite specifically, really.
I'll use a specific use case in our portfolio that I think drives the point between consumer and industrial. We had a very visionary and very intelligent founder that a couple of investors, including myself, spent a lot of time with a technology that can apply equally to the home, in this case consumer market, or a more commercial industrial market. And we debated it for quite some time with the founder in a healthy way, and we came up with the first use case for the technology to be a commercial slash, you could call it almost industrial app, which is apartments. It solved the problem of water leakage. And to your point, the amount of investment and capital and also the early stage of the market on the consumer side would have put a much higher risk on the company. What we found is we brought in insurance companies whose number one, as investors, by the way, in the next round, and it was a bridge round, number one problem for insurance companies with apartment owners is water leakage. We solved that problem. It was a ramp up for the company. It was an industrial app. And they migrated into the home market, but did it first by proving the technology, bringing on the right investors that had a very specific problem, and was able to ramp the company up in that industrial market and is now migrating also into the consumer market. So it's a great use case on how to intelligently apply the technology. In this case, it was very specific IoT technology in a way that brings capital in at a lower risk and allows a much lower risk in terms of adoption. To your point, the bar is continuing to rise dramatically on the consumer side, both in terms of the metrics and the proof case for validation in the market. So anyway, I think it's a great point.
So I think what I'm hearing here is our panel is in agreement that industrial is a much better opportunity. I think what I've heard is consumer is lagging behind industrial, that the execution tends to be easier, that there's just more value that can be created there, at least now.
Actually, I don't think that's really what I said. What I said was a few years ago that was true, and I was predicting that that would continue to be true, but it's turned out to no longer be the case. So there's a lot of investment now in consumer applications. I was just making the point that the startups and corporations as well have to think of the use cases. So it's not that interesting for me to have a connected refrigerator that tells me if I need more broccoli, but there are other consumer applications that are very useful. It's no big secret that IBM has a huge partnership with Apple. This is not an Apple Watch, but we're doing development with Apple so that Watson services will be able to be a personal assistant for you on your Apple Watch. And that's a consumer application that could have real business value.
I think the one thing I will also add there is on the consumer side, you know, your TVs are now connected. Your microwaves have cameras, if you've been following Kelly and Conway anywhere. You know, your appliances are now connected. So consumers are buying connected devices. The question is, how easy is it for a startup, or how risky is it for a startup to get to a point where consumers can adopt your product, versus for an existing appliances or consumer product company like an Apple, a Samsung, a Sony, the scalability that they can accomplish is so your competition on the consumer side is much easier for one of these established companies to come in, versus if you're going on the industrial sector, the incumbents are slower to act. You know, whether it's GE, whether it's Intel, whether it's Bosch, by the time you become meaningful to them, you would have gotten into a number of large companies. And so we see that a lot with flow sensors, for example, which, you know, by the time the existing players acted, it was too late, and now these flow sensors were everywhere in the water industry. So the other part of that equation is, let's slightly step away from the hardware itself. When you look at the entire stack, the stack on the consumer side is relatively shorter than the stack on the industrial side, because problems like security, encryption, storage are relatively easier, or for the consumer are invisible, meaning that the device manufacturer has to take care of a lot of those things. But if you're on the industrial IoT side, your customer actually cares about a lot of these things, and therefore there's opportunities at multiple levels, not just at the hardware level.
You know, the place where those characteristics come into play for things that are more on the consumer side is in medicine. So we have a big business in telemedicine and healthcare IT, and you know, we'll all remember Dick Cheney was concerned about his pacemaker being hacked, but it's actually not funny.
You know, it's really interesting. Listening to the three of you, I noticed that you very much focus on the problems to be solved and on the industries and some of the business issues. And so we've got an agriculture technology group at our firm. We put a lot of effort into it. If anybody knows me, you know that. And one of the things that really struck me when I first got into this 5 years ago is I'd meet a lot of very smart people in this valley who came up with gadgets that could do amazing things that nobody wanted, nobody cared about. And I've been on enough panels to know that it usually takes about 30 seconds before somebody starts talking about Eric Ries and the value of that business model. But especially in IoT. I think it's especially true in IoT. I think it's easy to be seduced by these technologies. And what I'm getting from this is that's probably not the right way to approach this problem. Would you agree?
I always go back to like how strong is the problem that you're trying to solve, whether it's with IoT or something else. Like at the end of the day, it comes down to the propensity of the pain point, the propensity to pay that the customer or the consumer has. And so, as a general statement, it's hard to agree or disagree with that. But if you look at the specifics and you try to get to how big is the problem to be solved, if you're going to save clean water, it's a big freaking problem. May not be for the consumer, because I don't care if I pay $110 a month for my water or I pay $120. It's not big enough of a problem. But go talk to the utility and ask them if they have a leak in their distribution system, how big of a problem it is for them. The loss of water is only one part of the equation. The cost to find the leak where it is in the infrastructure and then to go fix it is significantly larger. So that's why to actually answer your question, we'd have to look at the specifics and understand, is there a big problem to solve here?
I think that's a great segue into another use case in our own portfolio. In this case, it was connected luggage, definitely consumer. And the biggest worry you have is losing your luggage when you travel. Now, this happened to have another set of benefits, but the founders clearly had a vision about what the next generation of luggage would be, clearly persevered through a very difficult funding climate here, which is a bias against hardware products in the Valley, if I can be so bold to say that. It's not universal, but there is a bias. And in fact, they did get a successful round, but eventually had to move both the production as well as the next round to Asia, where there isn't a strong, if you will, a strong bias against pure hardware products, okay? But they're successful because the vision did not change. They had a very specific set of problems. In this case, this connectivity to luggage, regardless of where it is, and monitoring that, along with some value-added connectivity in the actual luggage itself, so it increased the value stack. And they persevered and, in fact, are scaling massively across the globe right now for an early-stage company. But it took a shift because they had a choice of licensing the technology or keeping the stack vertically and handling that all themselves, including the distribution. And they decided to go with the latter here, and it required them to make some adjustments along the road. But ultimately, the market spoke, and they're very successful.
As an entrepreneur, the one thing I would say you want to focus on is what is your core IP and what is your core competence. So when you think of a connected device, take a connected pen as an example, or tile. It doesn't really matter. But what is the core capability that you are adding? What is that unique insight that you figured out that this connected pen is going to perform better than any pen out in the world? And then think about, is that capability driven by the software? Is that driven by the hardware? Is that driven by the firmware or the connectivity or the security? What is that core IP that makes you so unique? And then just focus on that and de-risk every other part of the product. So a strategy that we've seen work very well with a lot of companies. So we looked at a company that was, initially their thinking was they will build the world's smartest headphones or earbuds. And as we engaged with this team over a long period of time, we really got into where do you add your unique value, because it's not in hardware. You guys are not the best at making hardware. And so eventually what it led to is they realized that their core value is in the software and a specific piece of design. So if they were able to protect that and license, and in fact, in that case, open source everything else. So you could be Apple or Creative or whoever who's really good at manufacturing and selling. All this company cares about is that you're using their OS and their software to run this. Because if that's happening, you're earning your royalty from every unit that is going to get sold, whether it's a Samsung or Creative or whoever. So as an entrepreneur, you want to look at how do you de-risk your business, and therefore you're also able to run faster, because you don't have to get tangled in all the complexities that come with building hardware.
Just to pause on that for a minute before we move on, and I want to bring it back to IoT, but if you did, it's kind of odd for me to hear a VC say that, to de-risk the business and lower the returns rather than to swing for the fences and try to do it all, because a product company would have probably had a much bigger exit, but a much riskier exit. Nope. Okay, I'd like to hear about that.
Just look at the multiples for a software company's multiples versus a hardware company's multiples. If you're a hardware company, sooner or later it's going to become a race to the bottom. The margins disappear so fast these days. I mean, before your product actually hits channel sales, someone in China is making it for 1/10 of the cost. So unless a core capability of the hardware is your IP, you're not going to win the hardware battle.
You know, we've been talking about hardware in a very generic sense, because I don't usually think of luggage as hardware. I think of the sensors and the chips and so forth as hardware, but I guess that's because I'm in a tech company. So the sensors themselves are generally commoditized now. There are still companies that make those things, and some of them are big companies and some of them are small, but it's not a good space for investors, and it's not a good space for entrepreneurs because it's kind of done. The places where it's not done are in specialized areas. So I just met a French company called Chronocom that has a specialized piece of hardware chip for doing machine vision at the edge of the network in a way that's very different from what anyone else has ever done. It mimics how the eye works, and they can look at a scene pixel by pixel by pixel, and it's just an incredible piece of work. But it's rare to find those kinds of things. That company does have venture investment, but new sensor companies that will throw off some data and do some generalized things in a city, no.
Might add to that is it's the stack, it's the upper part of the stack that regardless of the data collection or the IoT connectivity and enablement, it's the value add, at least in our portfolio and with our founders, is the top end of the stack. The interesting part about valuations is also the business model. I mean, if you're looking at really transaction-based revenue versus monthly recurring or annually recurring revenue, it's amazing the multiples how we've seen them grow. I mean, we've seen 1 to 2, 3x maybe on revenue on more of a transaction, one-time type of model versus 9, 8, 9, 12 plus in an annuity-based revenue model. So I just want to emphasize, think that through and sacrifice maybe the short-term, quick, if you will, revenues to have more sustainable annuity-based model, and the revenue and the multiples are tremendously rewarding, and it's been consistent across our portfolio.
You know, that's a very good point, because some of the successful companies I've seen lately have created a services business out of hardware and software. And so there's a company in Santa Clara called IntelliFlex that provides RFID tags that can go through dense material and at a very long range, and they can do cold chain. So they're very good for supply chain and for moving food from one place to another. And they've turned that into an annuity business, and they sell a service to the people who need to manage their supply chain.
That again goes down to where is your IP. So if your IP is on the data and intelligence layer, then you can apply all these subscription methodologies to keep the consumer number one engaged with you or the user engaged for a long time, and therefore derive value over the life of usage versus one-time value. And as you know, software companies that are more on the above the hardware stack and have a subscription model will derive the highest valuation multiples on revenue versus the one-time revenue. So a lot of the gateway type companies, for example, which is you deployed one time, their income is related to number of units shipped with that gateway, right? So that's not, once the unit is shipped, whatever gateway was this paid for happened once. It's not happening on an ongoing basis, but my data consumption I pay for every month, right? Because that's a service that I absolutely need. So think of, again, I just go back to what is the big problem that you're solving, and look at the entire stack and see where is that big problem, and is that big problem solved with hardware, software, data, insights? What is your value add in the equation? And then apply the business model that works best for that particular IP.
Okay, well, let's again bring it back to IoT a little bit more and talk about, I've heard some applications. I've heard agriculture, medical, you mentioned, luggage. I'm not sure how we categorize that. Travel. Okay, travel. There was one other.
Construction.
Construction, absolutely. So can we talk a little bit more about some of the use cases and really what you think is hot and where there's some opportunities and some untapped potential, that there's an opportunity for our audience here who are all startup entrepreneurs interested in IoT, especially as investors or as strategic partners?
Well, I think a good use case and a great question, by the way, is a function of understanding from the bottom up the problem in an industry sector. And in this case, we had lifelong contractors that were really gifted entrepreneurs that knew the construction business. And one of the biggest problems for construction, particularly large construction companies, is the ability to understand and get the utilization of equipment, which is very expensive, right, but is often idle. So how do you track, if you will, the utilization and increase the utilization of the equipment? How do you track the maintenance of that equipment, and how do you increase that utilization? And they use data, which is basically the IoT device that tracks both the maintenance of the particular equipment and the ability to, if you will, allow the utilization of that by a much greater than just one company, multiple companies, right? And increase that dramatically, and it's worked extremely well in that use case, but it came down to a fundamental understanding of what the issues were in that sector because they lived it themselves.
It's a really, it's a fabulous example because there's more to it than that. One of the best places to look for where you might build a solution is in underserved markets and markets that have not transformed themselves with technology previously. And that's very true of the construction business. 4 years ago, you would never find venture investment in the type of company you're describing. And now, if you go to CB Insights and look at their research, you get whole landscape maps of startups that are in construction tech. And just like ag tech became hot 3 or 4 years ago, now construction tech is getting to be hot. And so, and that there's real estate tech and so forth. So it's interesting to look at industries that you know really well because you have to have the expertise, but also industries that are underserved.
Yeah, I would say just think of your life and break it into units. So you have your house as a unit, you have your car as a unit, your commute or the infrastructure that you use to commute as a unit, your workspace, and whichever piece you look at, just see where is the market moving. So if you look at the home, for example, and what's happened with the home in the last 15 years, with the introduction of connected lights, connected everything, connected cameras, your security system, you can now arm and disarm with your phone. So if everything in the home is getting connected, what is the next step in that evolution? And just think 2 years ahead, think 5 years ahead. So if everything is getting connected, there's a huge opportunity for automation. If everything gets automated and everything's emitting data, there's opportunity for traditional industries like home warranty to get disrupted. Home warranty is as analogous and as stupidly mathematic as is possible, right? It's what's the value of appliances you have divided by 48 months because you're taking it for 48 months, that's your home warranty. You might as well just start taking money and put it in a jar. Just do the math yourself, right? But now, if everything in your home is emitting data, can I provide a better home warranty model which not only is able to give you better service, higher uptime, which home warranty models don't do, and be able to predict failure before it actually happens. So think, and that's what we like to see with entrepreneurs, is how do they envision the future based on where we are in that trend. So a lot of our investments are therefore leading indicators of what we see is coming down the road. And you can do the exact same analysis in industrials. You can do the exact same analysis in whatever unit you pick. Just apply your theory of where we are, how have we gotten here, and where do we go from here. If you are working behind the curve, I think no one on this table will be interested in that as an exciting opportunity. If you're building something, and I'll caveat this with, we invest pre-product. So we're always looking a couple years ahead on where is the market trending, and are you moving in the direction of the market? Are you going to create a market, or are you working against the macro trends? So, those are a few.
It's really true that entrepreneurs need to look at their own lives, how you live and work, to see problems that need to be solved. And how many people use Waze? So the Israeli gentleman who created Waze has created 6 or 7 different companies. And every single one of them was created because he was pissed off about something. So he created Waze for himself. And it turned out to be useful for all of us as well. But that is how he got these ideas. There's a Turkish entrepreneur who is now a multi-billionaire, and he has the largest transportation company in Turkey. Buses to the ski slopes. He'll put chains on your tires if you want to drive there yourself. He'll take you to the beach. He'll take you home from the bar. Guess how he started his company? Guess? Any guess? He started the company because he got arrested one night coming from a bar when he got in the car. And they took away his car keys, and they took away his car, and he's like, shit, I should have called someone for a ride. So he started a business to give people rides from bars so they wouldn't get arrested like he did. So I'm just saying, look at your life.
Well, let's follow up a little bit on that, not so much the bars, but the macro trends. Yeah, connected bars. That's all I need is another reason to stay out. So what trends do you see coming down? You're looking 2 years ahead, you say. What are the big trends that might inform this group as to what might be a good technology or a good industry to be in?
Yeah, anything I tell you is dated already, so if you use that and come back with it, you're too late. But what I would say among trends, one of the trends is connected industrial machines, or connected machines in general. And a lot of what's been happening to date is using our legacy infrastructure. So depending on the industry you are, if you're in paper and pulp, for example, these machines have a life of 15 to 25 years. So, the owners of these plants aren't going to replace these machines just because they want better connected machines. So what they've been doing is they've been installing add-on sensors onto these machines. But now we're kind of like 10, 15 years into that cycle of sensors being deployed. So the span is now changing, and therefore you're now going to have machines that are built-in connected. What does that mean in terms of how does the business of owning, leasing, shipping, maintaining these machines work? And so a lot of what we're seeing with respect to industrial automation is building workflows off of the data that is coming from these connected machines, whether they're built-in connected or with sensors connected. And what does that mean in terms of what is the value add of the human intervention? Right? So it's not just about what happens to the jobs, it's about as these pieces in our life, like I said, the plant is one unit. So if you look at that plant and the plant is getting more connected, what can be done with that data to drive better utilization, but also of the equipment, but also better utilization of the people?
So I do think it's all about the data. And so information can be used and analyzed in more intelligent ways to allow industries to be transformed. And so in any particular industry, there are different kinds of data and different kinds of data that can be useful, but it's up to us to be creative. If you can do things you could never do before because you have this information, a lot of clients don't know to ask for it. And so we have to show the industries what's available and what's possible for them to do. I'll tell you one really quick story. There's an executive who's CEO of a big data consulting business in Indonesia. And one day he happened to, through a friend, visit a rice farmer. And the rice farmer would plant when his great-grandfather had said to plant. And he would harvest when his great-grandfather told him was the right time to harvest. And he did it the same every year. And this CEO thought, you know, I'm a data analyst. There must be data that he could use to make more intelligent decisions. So he started analyzing the water and the amount of sunshine and the variety of rice, because there are lots of different ones. And he started providing that information, and he started a whole new company called CI Agriculture, and he increased crop yields by over 30%. It's all about the data.
I would just say I'm getting a lot more of in terms of a trend. I'm really not smart enough to say what that is in terms of IoT, to be specific. And I mean that jokingly, but I do see a globalization. In other words, I see a lot more entrepreneurs that are coming up with IoT as a base, but also a lot more entrepreneurs from Africa, from across the globe, that are having a strong and meaningful impact in their local markets, but also in their regions. And I'm seeing a lot more of that. And it's been impressive, and it's a trend of globalization more than IoT, but they're using IoT as a baseline.
Yeah, that's actually really true. I travel all over the world because I work for a global company. And so, of course, my executives always want to know who's who and what's what and what's going on in different regions. And I'll tell you, there's an IoT startup cluster in Penang in Malaysia. I mean, there's actually an IoT cluster there. And so it is true that people in other countries are doing the things that we're doing.
It's really interesting. It kind of all ties, especially the globalization part about that, because it seems that the rest of the world might have problems that we don't have, and we see solutions come out. I was just in Abu Dhabi recently, and if you drive out into the desert, you'll be driving along amongst nothing, and all of a sudden here's a vineyard that pops up, and then you'll see the little, cables and irrigation, and they're solving problems with technology that we don't have yet, but it's a technology that's certainly applicable here. So we talked about trends. One is globalization. So about data, let's go back to that, because it seems to me that, because there was a few years ago, people were gathering a lot of data, but it wasn't being, I don't know that the technology was there where they knew what to do with it, or that we're getting really good analytics. But do you see that the technology on the artificial intelligence and deep learning and analytics side is a trend? It's something that's gotten good, that's enabled other supporting technologies?
Yeah, we can do things now that you couldn't do before, if it's really true. And so, you talked about machines. I mean, predictive maintenance is a huge area for IoT right now. There are a lot of startups in it. We do it. General Electric does it. It's a huge area, and you can do it because you can predict based on the data. And so historically, people would use data to look backwards and see what happened. Now they're using data to look ahead and see what's going to happen, and that just changes everything, right?
I will say that if you look at some of the most valuable companies within your IoT stack that have been created, there's something about data that made them valuable. It's either they were creating proprietary data, Fitbit is an example, they were creating new type of data, or they were storing data in a particular way. So you have databases that are specific to capturing and storing time series data, or the next layer, which is the intelligence out of this data, and so that's where deep learning and machine learning. So with time series, deep learning is ultra powerful, because with deep learning you can draw insights that are any kind of structured data. You can draw insights that were otherwise not visible, and so we're seeing a lot of those applications of deep learning now with computer vision or without, specifically apply to time series data on things like predicting failures. And you know, especially now when you think about mission critical operations, you think about high risk operations. So, you know, if your HVAC blows up, what is the cost not just of fixing that, but the cost of the total damage that needs to be taken care of. You know, your in-flight and your flight equipment gets into trouble. The reason Intel paid up big dollars for Nirvana was because they want to do this. They want to do a lot of this processing now on the edge, right? So what Intel's identified, for example, is if you have sporting avenues, so your Levi's Stadium, there's a lot of data being generated at that one venue. Not just the broadcast data, but when the sport is going on, the audience that is there is consuming and generating a lot of data. So what Intel's trying to figure out is how can we process more of this data at the site versus having to take all of this back. So all of that is possible because of the advancements that we've seen in compute. But it's also necessitated because now we have so many devices that are connected that the velocity and volume of data that we're dealing with is significantly larger than what we were dealing with yesterday, right? And so it's both an outcome and a need of what's going on with connected devices.
It's also the case that you have data available to you that you might not realize. So most big cities in the world have ground stations that throw off data about the environment, and that data tends to be publicly available. And so you can use data that's made available by governments through open data initiatives and create your own company based on those things. There's an Israeli company called Brizometer that is trying to make understanding of air pollution as common and as readily accessible as our understanding of weather. And they use mostly data from publicly available sources to do that. Now, they developed incredible algorithms to make sense of it, but the starting point was stuff that's readily available.
I might add that it's the type of data, too, that can potentially make the highest impact. And we have, in this case, real-time data. So one of our founders has figured out a way to actually extend the life of aging folks in rest homes. And it's a function of being able to gather data in real time, telematically, and diagnose and solve a problem at the nurse home, because the attrition from going from the nurse home to a hospital is very, very high, particularly for older folks that are at that critical age. And he's made such a tremendous impact by not just getting the data in real time, by diagnosing it and providing a solution at the point of care, when normally that would be a matter of hours that can make a difference in a life. And it's a tremendous, valuable company and a great vision, but it's that ability to process the real-time data. So that's just a use case that I thought I'd mention.
Okay, Rob, we've ready to open this up for questions from our audience.
First of all, let's hear it for our panel. So we would like to take as many questions as possible. So if you have a question, come on up, introduce yourself, ask away. Step right up. Swami.
Well, I have one. Let me get things started. I was at another event earlier today with some stem cell researchers who made the point that medical technology is really increasing people's lives, but maybe not so much their health. So there's a real problem there, speaking of big mega trends, about people living longer but still carrying diabetes and Alzheimer's and all these different diseases. And one of the points they made is that this is creating a demand for much more demand for some of the medical products, maybe some of the IoT devices that you've talked about today. Do you see that as a trend? That it's kind of a dark thing to think about, but really, isn't that a trend that might be driving some of the industries?
Well, telemedicine is a huge category. and that's been true for quite a while. And it spans a lot of different kinds of technologies. So robotics is being used for diagnosis, but also to form some kind of connection with somebody who might be housebound and far away from their caregivers or their family. And there are ways to use video and audio and a robot and and devices that affect your caregiver's ability to look at your health, as you mentioned. So it's a huge category, and there are lots of things being done to make people not just healthier, but more social and part of a community and not alone.
Okay, question.
Yeah, so I'm a quite inexperienced entrepreneur myself, so we started a company, but what I'm getting from you guys is that big data is really, like, data is big, and data sells. So my question to you guys is, when I'm speaking to a VC, when my company is doing good at this point, or we've actually just gotten traction, so we've gotten our first customer, we've made our first sale, when we're talking to you guys, do we talk about that big data? Because we're talking about my own sector, it's my own market, students. So do we do the more appeal to emotion, or do the appeal more to the selling point, the data that we can collect, the real-time data from students?
Well, you're collecting data for a reason.
Yes.
So the VC cares more about the purpose of the data than how you collected it or how you analyzed it. I mean, there are VCs who are technical and love that as much as any engineer, but what they're going to fund is what you're doing with it.
Yeah, I would say always lead in with the promised land.
Okay.
What do I get by using this? And the promised land is, do I live a healthier life, a longer life, a more convenient life, a cheaper life? I save more, make more. What is that promised land? And then everything else, your data, just like data, algorithm, software, hardware, they're all enablers. And I honestly don't think many investors would care how you get there. What's exciting is the promised land.
I'm going to quote a friend of mine, Bill Reichert with Garage Ventures, because he gives a talk at some of my events about what VCs look for, and he ends up saying, and I don't know if you'll agree with this or not, he ends up saying it's a dirty little secret that VCs really fund things they fall in love with. And so take that to heart in a way, because what would somebody fall in love with? They would fall in love with something that seems like it's really going to do something wonderful.
Yeah, I would just say it's a function of the insight you bring into the market you're serving, and the depth of that insight. And the data is just a function of delivering on that insight and vision. So you start with that. I don't know if that helps, but that's certainly the way I would look at it.
I don't. Many of them I'm not even the user of. I think VCs invest in things that would make money. That's like, we are in a business of investing a little bit of money and trying to make a lot out of it, right? So we manage money for other people, but the way we have to do it, and that's why promised land is so important, is I am not a consumer for example, one of our companies is in using AI for faster drug development for brain health disorders. So talking about living healthier, it's not just about increasing the lifespan of people that are suffering from Alzheimer's, but how do they get this drug faster so they can live a healthier life? I am not a patient, I'm not a doctor, I'm not a drug development company, but I can see the promised land. And the promised land is, there's 30 million people who suffer from brain health disorders in the US, and if we're able to speed up development from 10 years to 4 years, we can get them 6 more years, and we can save lives, because in those 6 years, a lot of these people may die without getting the care. That's the promised land.
Thank you.
Good evening. Thank you very much for the brilliant content. My question is in regards to security when it comes to IoT. So I myself come from an AI background, and you hear a lot of horror stories about future to be cataclysmic and catastrophic, and AI taking over humans. And I do see the same trend developing when it comes to security and IoT. You see brain implants, and you see, like you mentioned, soldiers having an IP, and you hear a lot of stories about hacking and whatnot. So do you see a lot? Do you have any checklist before you would invest in an IoT startup? Or do you care about security or the security infrastructure when it comes to IoT, or is it just matter of good business?
Yeah, it completely depends on the sector that you're in. So in some businesses the risk is huge, and in some businesses it might be annoying, but it doesn't matter that much. And so it depends on the kind of business that you're in. I was just at a Department of Energy discussion about the electrical grid. Well, if something happens to the electrical grid, that's really, really bad. If something happens to my Fitbit, I just get annoyed.
So just to scope this right, are you a security company or are you a product company?
Let's say I'm a fan of IoT and AI.
Okay, that's just buzzwords, to be honest. So are you a product company or is security your product?
No, well, I'm concerned about security considerations before getting into IoT to begin
Okay,
with.
so in that case, security is just as much of a checkbox as it would be on an application on my phone or a Salesforce.com account that I use, right? So it's a necessity that you need to have, and yes, when investors are investing, they'll ask you, how are you going to secure the device or the transmission of data or wherever the attack might be? But if you are a security company, now it's a different conversation.
So there was a report from McKinsey a few months ago that in near future, because of productivity gains caused as a result of AI, we will embrace more AI, but the problem is that we don't have the political, social infrastructure for AI. Now, when it comes to IoT and security, do you see security going hand in hand with IoT?
Yeah, what I will say is, as humans, we are the most adaptable race, and whenever something new comes out, we look for what can go wrong. Fortunately, we are in an ecosystem that look for what can go right. And let's then cover for what all can go wrong. Let's take measures to cover what can go wrong. But anytime you're doing something new, it doesn't matter what you're doing. Anytime you're doing something new, people will ask why, right? So that's okay, but those are easier questions to handle.
And George?
No, I think they covered it well.
All right, thank you.
Big line, we should go on.
Thank you.
Hi, this is Rahul. I'm working on a consumer IoT product, and can you hear me? I'm working on a consumer IoT product, and actually coming here, I was seeking for some suggestions how to raise money. My own background, I think Qualcomm, I ran this strategy for IoT business unit, and after that, I worked on quite a lot of products which are successful in the market at TP-Link and the consumer space.
It's hard to hear you.
Sorry, yeah. I have worked in IoT for the last 3-4 years actually, and first at Qualcomm and then TP-Link and product management side, brought quite a lot of good products in the market, very successful bestsellers. I guess listening all of you, it looks like VCs have more, I guess, inclination towards the industrial side of the world, where the returns and basically obvious problem-solving ability of the team has inherent tendency, actually, from the investment perspective. My question to you is basically, if you're working on consumer IoT, at what point of time you should hit VCs? And I have tried, think few from my own side, not from my product, but someone else's actually. And I got the VC feedback that there is not a lot of investment on consumer IoT side right now, unless you already have a lot of volume in the market.
Actually, you really have to, anybody here who's looking for funding has to look for, to approach a VC that has a profile that fits what you're trying to do. So some VCs invest in seed stage, some only do growth. Some VCs will invest in hardware, some simply will not touch it. Some VCs, Andreessen Horowitz invests in consumer Internet of Things. So there are VCs that will do it. You need to do your homework and see which ones do that.
Are there metrics that you think are common among all the VCs? You shouldn't go too early. I think I heard you say you thought you might have gone at the wrong time. I mean, is there something? I mean, What should you have before you
that's
even
what-
talk to them?
Just to add, actually, there is a cyclic questions also. Like a couple of years back, probably getting funding on consumer IoT wasn't much of a problem, but right now, because a lot of Kickstarters have failed, and also the cycle of consumer IoT has probably gone down a little bit. So it's probably also a cycle at which I think we are hitting in the consumer IoT.
So I disagree. I don't think it was ever easy to raise money for anything. It was always equally difficult. If you're doing something meaningful, you can even today raise money for a photo sharing app, right? But the question is, how much better is your photo sharing app than all the options that are available to me right now? So the only thing that has changed from 5 years ago to today is VCs know a little bit better. There's more data about what works with consumer IoT or consumer connected devices and what doesn't work. So that doesn't mean it's become easier or more difficult. It just means that the data that VCs have, you have access to as well. So use that data, learn from what has not worked, refine your vision, refine your access points, refine your IP, and figure out, like, to me, when I go to raise money, if every time somebody says no, I try to understand why. Like, a no is not just a no, it's a no because of a certain reason. Because I can tell you, we are in the business of investing money. It's our job to invest money, right? And so I want to invest money in every single company that's here, but you have to be that standout company. And so I think from what I'm hearing from you, you're still at a very general level of I am an IoT, consumer IoT entrepreneur. Refine yourself. Customer development is something that I talk a lot about, and I always say customer development precedes product development. So if I were you, I would not spend $1 or a minute writing code, building a prototype. I would actually go out and talk to your potential users, really narrow down what is that cluster of users that are going to use your product. Is there a real problem, or are you just creating a product to solve a problem that doesn't exist? If there is a problem, how quickly would they make their decision to buy? How much would they be willing to pay? And that data will not only educate you, but it will ultimately become your pitch to that right investor. I agree 100% that you have to find the right investors. And so once you know more about your consumer, you will know more about your product, and you will know who are the right people to go talk to. There are investors in Silicon Valley who all they do is consumer hardware.
That's right.
And they invest pre-product. There are those people. You have to be a standout entrepreneur.
Sure. I will just complement that in this context. Money is flowing. It hasn't slowed down, particularly in the early stage. And I think your ability to articulate the ecosystem that you participate in and where your particular value is in that ecosystem will capture an investor's attention because you start at the big picture, not at the bottom.
Okay, thanks very much. Next, please.
Hi guys, my company is working with universities as our target market, and we're providing software for managing mobile workers, so all the people who are fixing things, plumbers, electricians, etc. We already have a product in addition to that kind of connects for those workers, but ultimately we want to help universities do more with less. For us, the best way to actually get in the door and stay there is to show that they can save a lot of money using our product, especially when it can long-term connect with other products. So an example is, speaking with Stanford University, they said they've got several people who are just checking water samples. So if they can automate that, then when something goes wrong, it goes into our system.
Sorry, what are you asking?
Yeah, so this is getting to what are some of the most interesting use cases that you guys see that universities would say, hey, this is great. Now that we have these sensors or these connected products, that can go into less diagnosis of products and more just sending out the people to actually fix them.
Wow, well, from what so we do have a big university business and we have a big IoT business. From what I know, there are different people managing different pieces of that. So there are facilities managers. You're not selling to the rector, you're selling to the facilities manager. perhaps, or to the people who manage the infrastructure of the buildings, or the plumbing, or the water. So, and those are, in any building or in any campus, those are different people for different things, and they tend to be pretty siloed. So in a city or in our own data centers, it was very hard for us to get the facilities managers to talk to the data center operators and the admins and so forth. They don't normally do that. So your job is to figure out who the buyer is.
You know, our panel will stick around afterwards for more specific comments. Okay.
Hi guys, my name is Naeem. So I have a question. So is it necessary to have traction to raise seed fund?
No.
You have to have proven that people will buy your thing. So they don't have to actually have bought it yet at the seed stage, but you have to be able to demonstrate that you know that they will.
I would say that it depends on where the seed stage is. We've had a morphing of the seed stage. There's angel, there's seed, and there's late series seed. And this is what we've seen. We've seen the bridge between the more formal seed to the A has been this bridge round, all right? And that is the most difficult. So a lot of companies that were funded on the assumption that they would continue to get money without traction have run into the greatest difficulties. Very specifically, if you're going to raise a seed round, raise enough to make sure, I would advise getting your A round, which is a function of getting growth metrics and traction. The ability to continue to do a rolling close on the seed is becoming less likely, in my view, in my opinion.
So here's how I think about this: is you have your pre-seed round, which is pre-product. You raise your seed round when you have something functioning and you have some validation that your hypothesis will work. So you go into pre-seed fundraising with hypothesis and customer development, that you validated the hypothesis. If you build this, it is a high pain point for some customer or user, and they're going to pay for it. As you get into seed, you're now looking for how we build this product. We deployed it with the first 1, 2, 3, 4 customers or a few hundred users. Here's the proof point that this actually works. There's a success proof point. Anytime, so as entrepreneurs, you have to understand that VCs are terrible at giving straight answers, right? Unfortunately, that's just the truth of the industry. And the reason behind that is most VCs don't want to burn their relationships with entrepreneurs because they don't want to be this, jackass that you don't go back to ever. So they give you answers like, this is not a fit for us. Let's see when you have some more traction. What they're really saying is either your story is not powerful enough or you haven't convinced me enough that you're ready for an investment. So it's a deferring strategy, not a strategy that if you have traction, I will invest in you. Traction is kind of this catch-all. Once you have traction, everybody's going to want to invest in you. But it's not needed, and it's often a proxy for something else that's missing in your story.
VCs, as you said before, Nitin, want to put money into things. That's their job. Their job is to disperse money and get money back. And at every stage of the game, the thing they have to worry about the most is what is the risk. And there are different kinds of risk at different stages of development of a company. And so the thing you have to do is understand what risks there are at each stage of development and take the risk out for the investor.
Okay. Thanks very much.
Cool, thank you.
Hello guys, my name is Tarek, traveling here from Texas. I own a company, Smart Home Automation for Businesses, mainly for home builders. So first I will start with a compliment. Love the way you guys talk about big picture. So you're talking about saving technology, saving people's lives with technology, helping agriculture with technology, or helping counter air pollution with technology, which is pretty awesome. One thing you guys did say repeatedly is that you have to look for a problem in the stack and have a solution to the problem. What if there is an enhancement to the solution that's already out there? So for example, you're Fitbit, right? Fitbit wasn't the first company that tracked your data, right? There was another company that went on Kickstarter. Then Fitbit came along, and they did a better job ending up buying the company, right? So what do you guys think about enhancing a existing problem and doing it better? So for smart home technology, right, if I have a company that does things better than Nest, is that something that will attract you? Or just because I might compete with Nest, it'll scare you?
It completely depends on what you mean by better. So, there's some things that better, and nobody gives a shit. And there's some things that are better, and people go, wow, I really need that. That's way better. And so, we always talk about value propositions and where is the value, and it could be partly in execution or distribution or how you sell or who you sell to, but it's got to be better enough so that people really care.
So I think it's tough to specifically speaking about the smart home market, right? So it's the orders of magnitude of change that you're bringing about. When I look at companies, what I'm really looking at in one statement is, do these founders have an unfair advantage in solving a big problem in a way that they could become the new market standard? If I can write that statement about a particular company, we'll likely invest in that company. So what does that mean? So if you're building a new thermostat, and that's going to replace my Nest, or it's going to replace my dumb thermostat, maybe it's 2x better, but it's not that new market standard because there's already big players who have that capability, right? So that's what we call incremental innovation. And incremental innovation is not ideal for VC. If you're bringing about 10x or better, which again, nobody can measure that impact, but first round capital kind of started this 10x or better thing, so we kind of just roll with it. But effectively what we're saying is disruptive innovation, something that's going to replace what is the standard today and become the new standard. And so if we talk about a smart home now, I personally think, at least at our stage, we're done investing in more of connected devices. That will continue to happen, but I believe it will be, even in good outcomes, those will be small exits, and it will be the larger companies that continue to innovate. So you've seen a lot of appliances or devices come from Philips, for example, right? GE is doing a lot of that. And so the question then is, if every single device in my house, if everything that I had to walk to the wall for is now on my phone, what could be the next disruption that can come? And so if you become the standard, if you come to me with a standard for, here's what we can do with this, which is what this team of 3 guys from Berkeley, who came from Israel, Japan, and China, came to us with an idea on. We invested in them, no code, nothing. Here's what we're going to do. This is where the world is going. This is why we'll be the next standard of home automation. And they just demoed at Stanford. That's what we're looking for, is disruptive innovation.
Thanks very much.
Thank you.
Last question.
Hi, I'll try to keep it short. Couple things. First, I'd like to understand the security trend for VCs. With the recent investments in security, especially for IoT, has been largely from the European side of, or Asian side of VCs. Is the US catching up, or is there another reason as to why that's not the case, one? Second, when it comes to IoT, what is your take on brownfield deployment products? Is that something that attracts investment? Are there companies getting into it, or are newer products, greenfield, better investment genres compared to the brownfield?
Well, I'll take the first question, and you can take the second one. So one of the sectors I track is security. So there are investors right down the street here who are some of the best security experts in the world. And probably a minute and a half on Google will tell you who they are. So it's Kleiner, it's Allegis Capital, it's Greylock. They're better than anybody. And so if you look at their portfolios, the companies they're investing in change over time. There are new kinds of technologies that require security that may or may not be able to use things that already exist. So right now I'm thinking about blockchain. Can blockchain use the same kinds of data protection and identity security products that were used previously, or does there have to be something new? And so these investors are always looking at what the world needs now versus what we did in the past, and they're very, very good at it. So we're not behind anybody in this.
I will say security is like food; it's an evergreen industry. The challenge with the challenge with security is that the nature of threats change very quickly, and therefore, what you're looking for is, if we're investing in a company now, is this going to be a trend? And as this trend changes, or if this trend changes, will this team be able to refocus and become a part of that trend? So, for example, with the emergence of mobile payments, you had a lot of security companies come in on the mobile payment side. And so, as the nature of mobile payments has evolved, these companies have had to evolve. Some were able to do that and some not. Overall, I think the value creation from investments in security have been relatively low, what compared to, say, enterprise SaaS or mobility. And that's not a function so much of security as an industry, it's simply a function of it morphs very, very quickly, right? The winners that come out are really large winners, and otherwise the exits are relatively small. The second question, if you ask me, would I choose between greenfield and brownfield, I'll always choose greenfield, right? So the question is not so much what it is. The question more is, or the trick is in how you present the opportunity. That's where storytelling comes in. So, you can, even today, you have companies that are starting out and doing textbook rentals, for example. Yeah. Textbook rental is a problem that was solved in 2007.
There's still new startups.
Right. But they're coming in with a new edge. So it is not a greenfield space. It is a marketplace that's being solved, but they're coming in with a completely new way of doing it. And so you can make something an interesting avenue.
So just clarification. When I meant security, I was talking specifically about device security, because we do a lot of cloud network security, and we have all the big guys here do it. And on the brownfield, because one of the biggest security concerns for especially industrial IoT is that they're not able to put these greenfield solutions on their already existing systems. So is that something, is that a big market? I mean, there is a big market for it, but does that attract capital?
It all depends on how you tell the story. I mean, look, it's not the investor's job to do all the, VCs do a lot of work in the background. It's not their job to come up with how will this get adopted. Someone earlier asked the question on what is a use case at the university. Like, why would you ask an investor that question?
That's your job.
We want to see the world through your eyes. And so if you are an entrepreneur who's going to expect the investor to lead that vision, it's never going to work out. Investors are always looking for founders who draw the vision, and that vision now is so exciting that I want to be a part of it, right? So I think the question itself has to be framed better to get better answers.
And I'll complement that in this context. It's a function of your life story that gives you an insight that's compelling, and you could tell that both from a personal experience, professional experience, whatever context. That strength of that story about you is what we ultimately buy into. And that is a function of storytelling. So I just would end with that from my perspective.
Okay.
Roger, a real quick question. How does the panel see blockchain interacting with IoT as we go forward?
Well, a year ago at CES, IBM announced a partnership with Samsung to create a blockchain transparency for IoT networks. And so, blockchain was created first in banking, but really to deal with digital assets And so as long as you're talking about digital assets, it's relevant. I've seen it used in artwork and in healthcare and in IoT and lots of places.
Okay, Rob, I'm going to give this back to you. I want to thank our panel. And thank you, audience.
Ladies and gentlemen, stay in your seats. We've come to the point at the event you've all been waiting for. It's the raffle. So your chances are pretty good. We have 8, count them, 8 prizes. So has everyone who wanted to enter the raffle already done so? Come on up. So first prize we have is Roger Royce's book, Dead on Arrival, How to Avoid the Legal Mistakes That Could Kill Your Startup. And you can even get it signed by the author and have your picture taken. Winner is Yuchi Kajura. Come on down. Going once, going twice. He's not here. Next. Snooze, you lose. Okay. Dan Sharoni. Dan. Okay, how about this? A $25 Amazon gift card. Who could use that? And the winner is Daniel Craig, Uniboy. All right, next we have some good stuff here. It's the classic Idea to IPO coffee mug. And the winner is Senstone, Nazar Fedorchuk. Nazar, come on down. Okay. So next up we have the classic Idea to IPO jacket, and that's what it looks like. The winner is Andrew Coons, Zip Socket. Come on down. Okay, now we're getting into some really good stuff here. A free pass to Idea to IPO proprietary events for May of 2017. And the winner is Damon Moon of Samsung. Damon, come on down. Okay, IoT World, Taylor and Melinda, they've got some 2 awesome prizes. Why don't you tell the audience what the prizes are?
So we have one everything pass, which is everything at the conference you'll have access to pretty much. And the value is $28.95 to be exact.
2,895.
Yeah, $2,895. And then also a startup pack to showcase in our startup city and pitch in front of our investor panel and access to the Startup Academy, which is a $1,250 value. Yep.
Say it. Say it.
And the winner is Jurgo Soren.
Jurgo Soren,
Connect.
PhD. Come on down.
Wait, which one are we doing?
We'll start with the first one.
Everything pass.
Everything pass.
Jurgo is
Not
on
here.
once. Jurgo's not here.
Not
Next.
And the winner is yeah, another Samsung hose and Chung.
So
And then this is for the startup pack. And the winner is Lloyd Tran.
Lloyd, come on down. Okay, so now we've gotten to the grand prize, and this is it. So yes, and it's real. I got it from the bank earlier today, and I know many of you are so high tech you don't use cash anymore. So if you do win, please give it back. And the winner is Sana Razguli, PhD. Come on down. All right, that's it. So our panel will stick around if you want to talk to them one-on-one. Thanks for coming, and see you next time.